Let's get to the budget wish list for the power sector. And Abhishek joins us with that. Hi, Abhishek.
Good afternoon. Well, power sector is expecting increasing spend and plan expenditure. That's of course expected for long now. They see spend towards distribution actually increasing. In this budget 2011. The sector is also expecting that government should set a fund to provide loans to discoms based on milestones or specific milestones. So that is one more thing to watch out. Now, apart from this, of course, the coal tax that got introduced last year, which is about 50 rupees per ton, that the industry is expecting that it should be abolished. But analysts are saying that it is not likely that this would be abolished. So this provision would be more of a wish list from the sector, but nothing from government side is expected. The sector also expect government not to expect the proposal of import duty on power equipment. This would not just cover power sector but power equipment players as well, and this would cover the ambit of all those capital goods players, BHEL, L&T, BGR. Names like Haprin and other players from Chinese market are supplying equipments at a fraction of cost of 40 to 50% lower than Indian players. This proposal, if not accepted, would go a long way for the power sector, but again this would be a negative for India's domestic capital goods industry.
All right, Abhishek, thanks very much for that. Quickly on to you then, Rupesh. Regarding the power sector, Abhishek did point out a few positives that are expected in the form of planned expenditure to increase spend towards distribution in the form of soft loans coming out. If this actually happens, how big a positive is this going to be for the entire sector? And then which counters do you think would benefit from this?
Good morning. If you look at the currently power sector gets benefit of Section 80IA, that is a 10-year tax holiday in the first 15 years of the projects, which will get commissioned before March 2011. So we are more positive that the extension of one more year till 2012. And in terms of fund allocation in transmission and distribution, that is likely to benefit most on the equipment side, not on the utility side. But given the high deficit, coal deficit, we are seeing more clarity in terms of minings and more clearances in terms of giving captive coal blocks to the companies, and more setting of funds on regulatory changes in terms of mining. In terms of indirect taxes, that is import duty cuts, that we are not seeing any kind of changes happening on that front. So we are positive on the private companies, their projects which are will get commissioned before 2011, and because of extension of Section 80I, those companies will get benefit out of this measure. See, currently there is a import duty on the power equipment manufacturers, but if you look at the 12th plan, then the next 5 years we are expecting close to 90,000 megawatt of capacity addition, and almost 60% will come from the private sector. And if you look at the constraint which is there in the domestic equipment manufacturing facilities, so given the high import from the China and South Korean, we are not expecting that will hurt the domestic equipment manufacturing company, but it certainly will add it's beneficial for the private players which are giving a huge order to the Chinese equipment manufacturers.